Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Guys, I mentioned in my last video how we had that bullish breakaway gap. After finally clearing previous all-time high, we closed above it. After gapping above it, that was on September 19th, last Thursday. But what happened on Friday? Well, we had a nice little pullback here and we went back to that 565 level and retested it, and we finally got it to be treated as a support level. Okay, first time it's happened, and so far it found some buying pressure. Could this be a dead cat bounce? As you guys know, Uncle just goes with the charts, guys, and I follow the price action. And my levels can come from fib levels, structures, previous buy zones and sell zones, all that happy stuff. And like I said, 565 was a previous all-time high, previous sell zone. Now is the buy zone based on last Friday's price action. So if this is a dead cat bounce, 565 and even the gap around 560.8ish need to break down to trigger puts. Okay, I will stay bullish as long as above 565, guys. Okay, if it's above 565, the breakout stays intact. This back test as support is a successful roll reversal. I like to refer to it when a sell zone turns to a buy zone. I call it the roll reversal. So it's a successful roll reversal as long as price stay above 565. If it's below it, I would favor a pullback. All right, guys. Now let me give you guys some short-term levels to pay attention to. Okay, you guys see what I just did there? So I go to the previous low. The previous low I was looking at was September 6th. That was at 539.44. 44. Yep. So I'll make sure the coordinates correct. And then I got all-time highs at 572.88. Okay. And now we got some shorter term levels that we can pay attention to. So if we lose 565 and the gap fill around 563.8. If those levels fail as support, my target would be 560, 556 would be a possibility, and all the way down to 552 if we strictly refer to fib levels. Okay, those definitely would be targets. Like I said, we break down 565, that will be a false breakout setup. Okay, that's why I would favor a pullback. We don't want to call tops as a call tops, but if we are, let's do it with the odds in our favor. Let's do it when there's a false breakout setup or an exhaustion gap or something of that sort, okay? But as long as above 565, bullish. Next target is above 565 to 566.5, 568, 570. And then, of course, that all-time high at 572.88. I'm around it to 573, okay? If we can clear 573, we can definitely go a lot higher. Maybe up to 578. That will be an ultimate target of mines. Okay, now let's take a look at triple Q here. It did have that breakaway gap based on the downtrend line, and it hit that fib level, the 78.6 fib level that I have at 486.2ish. Got a little bit of a pullback once we hit that level, but we did not lose another critical fib level I had, which was at 482. Still so far closing above. So if that level fully if it fully defends, it needs to show follow through by clearing 484 and 486 to send us up higher. We do got this weird looking W pattern, but for it to fully play out, we need to break out those resistant levels to get to those higher highs and really play out this W pattern. Okay, all right, so far it's in the making. Now if it's a failure, and we're gonna have to break down support. Okay, breaking down 482 and 480 would be a start. Now you guys notice something about these candles, right? I want you to notice something about this candle on triple Q here. You see this previous high, September 18th. All right, it's not pinpoint accurate, but you see around the area, okay, where the wicks are. Okay, you see that orange line? Sell zone becoming a resistant zone becoming a support zone, or a sell zone becoming a buy zone. You guys can see that. All right, that level is around 478.7ish. Okay, so if that level breaks down, I would definitely favor a deeper pullback to the downside. Maybe go test 472 to 473 zone. Below 472, I'll definitely be bear bias again, okay? But breaking down those levels, 482, 480, and 478.7ish would definitely be a good start for the Bears. Now to stay bullish, stay above 482, and like I said, clear those levels, 484, 46, and we can definitely go up higher. NVDA, I got structures within structures, fib levels with the unfib levels. Now the plan to be bearish is overall still the same. NVDA needs to break down 116 once again. It failed to do that last Friday and Thursday, okay? But if it does, 113 will definitely be in play. We could have a potential M pattern playing out here if it breaks down 113. That's the previous low from September 18. That will put 111 and possibly send us all the way back down to 106, the bottom of this triangle structure here, okay? For the third test, we could get a bounce there, all right? Possible bounce there. But to be able to test it, we need to break down 116 and 113, and definitely would be a possibility. To be bullish, got to stay above 116, right? But we based on this downtrend line on the orange line, it needs to break out 119, okay, for a breakout. So I got resistance at 117.5 still and 119. If we can break out, that would be bullish at 121.8, 125, and possibly all the way up to 127.5 in play. That's based on the downtrend line of the pink line here. If we break out, a bottom is in, very bullish. Okay, guys, so above 116 and clearing 119, bulls have a shot at more upside. Breaking down 116 and 113, bears definitely have a shot at more downside. Tesla is in consolidation mode after the nice gap up. It's in consolidation. We do have an inside candle set up here, okay, guys? So to be bullish is quite simple. We got to break the preceding candle's range, and the range is 232 to 244. All right, so from here, 240, 242, and 244 must clear at these levels to your chart. You see them breaking out. Higher the time frame, the better I recommend. But if you're breaking out, closing above them, that's bullish, okay? Especially above 244, I would be bull bias. Now, if we start breaking down support, 236.5, 235, I would be bear bias. Okay, now the mother candle's low, or the preceding candle's low, is at 232. Below 232 would be very bearish based on this setup, and we could possibly go all the way back down to 226.5 in the 224's area. Okay, below 224, I would be bear bias because that would be a false breakout of this downtrend line. All right, IWM. Now, while the other ticker symbols, indices, and stocks looked a little indecisive, IWM, it looks like it wants to pull back some more, guys. After hitting a critical fib level, we had selling pressure there. Now it's starting to break down more support levels, okay? This is not a bullish sign at all. So breaking down 221.8 is a good start for the bears, and as long as below it, 219.7, 218, and 216.7 are all in play. Below 216.7, put 215, and possibly 212.6 is in play as well, okay? If there is a bounce, we only trust bounces that can recapture lost levels. So recapturing 221.8 and clearing 223 would be a good start. But clearing 224.5, which is the fib level showing all the sell zone, clearing that would definitely be a massive win for the bulls. All right, guys, let's take a look at the dark pool levels. So from last Friday, majority activity, 49% came in at 562.72, and then 36% came in at 567.97. Okay, 567.72 and 567.97. I might have said it incorrectly earlier, but that's the right one. Okay, now the amount of premium, at least around 569, which is the lowest percent, 15%, came in at 2 billion, but the others, 4.7 billion, and then 567.72 was at 6.3 billion. So we're seeing dark pool. That's massive. Those are some big premiums. So it seems like big money. At the very least, we can't decide if what their intentions are. Okay, it doesn't tell us if they're buying or selling. We know there's a buyer, we know there's a seller, but we don't know the intentions. What we do know is that a big amount of money is being moved, which means they might be expecting something big coming. Okay, and I'm hoping that's the case because I need some volatility to trade, guys. Anyways, 1.5 billion came in at 482.65. Now the SPY a lot more often is getting premiums over the billions, and Triple Q not as often. But today, well, last Friday, it broke over a billion. 1.5 billion came in at 42.65. Very interesting to see that even Triple Q is getting a high amounts of premium coming in. Tesla, now this is not over a billion, but for a stock, 865 million is a lot. And that came in at 282.25, guys. Add that level to your chart. That's where the big money's getting busy. NVDA is 116. That lands right on my level. I've been saying below 116 is bearish, and looks like the big money players are also using that level. Not because of me, but they have their own reasons. Okay, I think I covered everything, guys. Let's get to the option flows. Here is the SPY. We're gonna filter it for the most aggressive play. So we'll look at $100,000 in premium or higher. If you guys have access to this, tier 3 members, you know, you guys can do what you want, feel is best, and feel free to share with me what you find. But I'm gonna look at the most aggressive one. So we got 100K premiums or above the ask. And again, I'm doing this for potential new viewers who may not know what I'm doing. I'm getting the sweep orders because they're the most aggressive ones and out the money. Okay, and you guys can see that it's bearish, 2.4 million in the puts compared to 961,000. All right, keep in mind, guys, even though it shows that a lot more puts are being bought, it also says that a lot more puts are being sold. Okay, guys, but let's take a look at the context. Today's date is September 22nd. So we have a call here for September 20th. That cancels out. This one was for September 23rd, 570 strike price. They entered around 569.2. They might have tried to get in on the dip. We'll see if it'll pan out for them. Now, here are the aggressive ones, okay? October 11th, 539 strike price. It's almost $1 million. November 15th, 540 strike price. October 18th, 563. These are very aggressive, but I want you guys to notice that the dates have time on them. They're far out. So these players, whoever they are, they're probably not expecting SPY to drop just yet, but I don't know what their intentions are, but let's just say they have time on their contracts. Let's see what happened. They entered around, this one entered around 566.95, 568, and 568.44. So we also get an idea of around where they are entering, okay? We have some calls here. Once again, September 20th, September 20th, we don't count that. This one's for October 31st, Halloween, 572 strike price, okay? But we also have for Halloween, it's a 560 strike price. This is for puts. This is for calls, so January 17th. And then we got a bunch of puts that are expiring this coming week, okay? So looking at it, the edge definitely goes to puts, all right? They haven't been getting paid, though, so just keep in mind, if I was a market maker and I want to cause maximum damage, you know what I mean? What do I really want to pay off all these puts? I want to trap everybody out first. Here is Triple Q. It is bearish, 5 million compared to 1.5 million. We got an October 18th call. We got a September 20th. We'll cancel that out. A bunch of September 20th. So we've seen a lot of these calls on September 20th. Some puts. We got a couple of puts that are also September 20th. A few, actually. But there's a good amount that's a little bit further out. Like this one's December 20th, 355. Wow. 355. This one's a 450 strike price. Incredible. But yeah, the edge is definitely going to puts. But remember, they're being bought. They're being sold, okay? Tesla. How do we use this? You combine it with the price action, guys. Combine it with the price action. Okay, so Tesla is overall bearish as well. A lot of these puts does have time on it. There's some that's already expired, a few actually. And as far as the calls go, this is expired. This is expired next week. So some of the calls are expired next week. Not too out the money. 245 strike price, 250 strike price. But the puts, we got one for 175. Wow. We got some for 240. So not too aggressive. 227, 235. Yep, definitely more puts still into calls. You guys notice while all these puts are coming in, the price has just been rising. The Fed say what they do on the 50-point basis, whatever the hell now. Last time, usually when the Feds do those type of rate cuts and stuff, the market actually responds bullishly, at least for the short term. And yeah, bearish for NVDA as well. Okay. November 15th, 115 strike price. 115 strike price. October 18th. Okay, we got some calls here. This is pretty mixed. Slight edge goes to puts. Yeah. Did I get IWM? Yeah, IWM is bearish as well. 100%. 4.6 million. Nobody even thought, as far as aggressive based on my criteria and filter, no one even thought of buying calls. 212 strike price, 212 strike price, all have time. October 18, 211, 211, 212. Wow. That's a lot of money, guys. Are the big money players going to really pay those off? You got to ask yourself that. Alright guys, that's going to do it for me today. I hope you guys found value in today's video. If you guys want more content from Uncle Charles, please consider joining my Discord. I really appreciate you guys. Have a great day. Peace.